Hello everyone, welcome back. My name is Greg Furman and this is the VantagePoint AI Market Outlook for the week of August the 26th, 2019. Now, to get started this week, we're going to begin where we always do with that very important US dollar index. But again, just a reminder that this weekly outlook does look at all of the major markets, including some of the major Forex pairs in our trading. So when we look at the dollar, absolutely the dollar has a very strong correlation right now to the S&P 500. Both stocks and the dollar very much under pressure with the trade war. But when we look at our VantagePoint software, the main thing we want to understand here is that we've put a top in place on the dollar. Basically, at the beginning of the week, we talked about this in the VantagePoint live trading room each week, but the dollar putting that top in at or about this 98.33 area, now coming under significant selling pressure leading into Friday. But again, if we look at that medium term, crossing the long-term predicted difference with these verified zones up here, warning us that the dollar has significant resistance anywhere above the 98 level. This failure basically has come to fruition as the trade war, hostilities are increasing. That's probably an understatement at this particular time. But what we also need to understand is the dollar also has support down here. Using these verified zones to identify that tells us that we're still, at least for now, within the range. Now that lower end of that range is coming in at or about the 96-98 area. More serious support is coming in down at or about the 96.32 area. But if we lose this level next week or in the coming weeks at 95.36, we could see a break out of this range and a new trend formed, obviously to the downside in the dollar. Now, very few buyers up here this entire week. That off that high at 99.35. Finally, we've succumbed. We were waiting for that signal from VantagePoint. That's come to fruition, and down we go. Now, that is clearly helping out gold here, but gold again coming down, testing that critical vantage point level at the 1500 mark. Now this level at 1500 or just below, we can see support this week is built up. I'll just draw this line in here so everybody can see it. That's support at basically 1492, intersecting with the vantage point critical T-cross long. We're getting another buy signal yet again forming on gold as the RSI is rising. But the main thing we want to look at is a completion of the medium term crossing the long term predicted difference. The neural index already clearly on board here, and we're starting to move higher. Now, when we look at that, again, as we compare this to the S&P 500, I've been a very strong advocate of selling this thing into any kind of rally. Very little supports buying stocks at the current time. When we look at this, I've drawn a line across here. That's still in there from our live training room this week where we were selling in anywhere near this 29.40 area. Again, our triple EMA cross would not complete. Our medium-term crossing, our long predicted difference is confirming this. But we still need to be cautious, guys. We still have buyers down. That's why we have these verified zones on here. It's not about being right or wrong in trading. It's about basically it's about knowing your levels. So right now we do have support at 28.16. I would say it's inevitable that that's going to be challenged. But much bigger levels that we should be concerned about are 27.76 and this one over here at 27.33. Now you'll notice when I back the VantagePoint charts out to a 6-month period, we can see a very heavy double bottom down here at 27.30. So in my respectful opinion, we are likely going to challenge this area sooner rather than later. The path of least resistance is to this level. If this level breaks, the longer term range will likely break, and we would probably be looking more towards the 2400 mark. But again, we still need to watch these upside. In most cases, when we have a big sell-off like this on Friday, we should look for retracement points. In my respectful opinion, 29.10 is a reasonable area. If we click on our F8 in our VantagePoint software, another critical level, which is 28.93, I would anticipate we will come back up and test this level. Now, if we fail at that level again, then basically we can fire at will on shorts. But what this price action chart here, where you can see I've put this this black line across just below our verified resistance level clearly tells us, based on price action, there is no buyers up here. That's what it's telling me. So each one of these days off of this verified resistance represents a very, very powerful short. Sort of like shooting fish in a barrel. If you know your levels, guys, that's the main thing. Now, as we look at next week going into oil, not much love for oil here either. As equities plummet and global growth slows, oil obviously moves lower. But right now, we're still within that range, going down to this $50 a barrel mark. Only a break of $50 would really see oil accelerate to the downside. Right now, as we look at these charts and these verified zones, very, very few buyers of oil anywhere above $58, $60 a barrel. So again, we've discussed this one in the live room too, that I'm not really, as long as stocks are under pressure, I'm not a big advocate for buying oil. Now, when we look at some of the other markets here going into next week, and again, some weeks I forget to mention it, but if we look at, some of the additional markets that are benefiting from this particular trade war, the first one that comes to mind here, guys, is Bitcoin. Now, heated debates whether Bitcoin's a scam, whether it's this, whether it's that. I don't think it's a scam here, guys. We've rallied on this thing off of the down in the lower 3,000, 3,700 mark back in March of this year, rallying all the way up to 14, 15, 17,000 on this thing. We clearly do have buyers. Now, just very briefly, I noticed that after the Jackson Hole, that Governor Carney of the Bank of England was interviewed, and he's talking about forming a global digital currency. So again, that brings Bitcoin potentially into the forefront here. But there is definitely, in my respectful, an investment here. So when I look at the medium term crossing the long term predicted difference, we've got very, very strong verified support down at 91.73. We could see a spike in Bitcoin next week or in the coming months. So definitely something we want to look at. We do have a very soft buy signal on here right now, but we just need to clear this critical vantage point level, which is coming in at 10,560. If that gets on the move, then we should see Bitcoin start to move higher next week. Now, again, volatility is going to increase. We are absolutely in summer trade, the end of summer trade. Now, when we look at our main Forex pairs, guys, I want to try and cover all the major markets. And in my respectful opinion, Bitcoin should be included. Whether you love it or hate it, we don't want to be like Warren Buffett and just ignore it. He said the same thing about the Forex market back in the 1990s, and he ended up going into the Forex market, which helped save Berkshire Hathaway when his stocks were under heavy pressure. So Bitcoin, again, it's something to keep our eye on. That's all I'll say. And I get inundated every week with, should I buy or sell currency or Bitcoin? Is it a scam? I don't think it's a scam, guys, but we'll see. So when we go into our major Forex pairs, the Euro US, again, and this week in the live VantagePoint training room, where you can really see the power of VantagePoint in live conditions, we talked about buying the Euro US on Monday and Wednesday of this previous week, and I had warned the room that a buy signal was forming. And to be perfectly blunt, there is almost no fundamental reason to be buying the euro other than US dollar weakness, right? So when we're taking the correlation of 31 other markets and we look closely at this, it very clearly was warning us that the euro was getting ready to move higher. As stocks plummeted and the US dollar plummeted, money branches out. Big money, like locusts, they move from one field to the next. So we've cleared this major hurdle, which is 111.34. We've closed 111.37. We haven't cleared it by much, and I would expect a retracement, but you can see that when you're using price action trading and combining it with VantagePoint, we simplify our trading. We don't need to add 50 indicators to this that are all lagging, right? We just need to look at the price and look at the core indicators in our VantagePoint software. That clearly warned us that if nothing else, the euro was getting ready to pop higher. That is exactly what happened. So we're going to see if we can hold above this critical level this week. This is the level I want you guys watching. Basically two levels, 111.34 and this lower end down around 110.50, which we talked about in last week's Forex weekly outlook, 110.66. We're going to keep an eye on this, but the predicted differences are rising. They're saying that the trend is starting to slightly shift on the euro. So we want to keep a very close eye on that. But with that rising RSI, which very easily tells us momentum in the market, it's a leading indicator. We've got momentum building to the upside. So we'll see if that can continue on Monday, but expect a retracement on Monday. But again, we're looking for that potential to buy this. Now, with U.S. Swiss franc going into next week, two trades that you guys want to understand: U.S. Swiss franc and dollar yen. It's the exact same trade. They are risk off currencies, the Swiss franc and the yen, money pouring into these currencies. But if we look at the US Swiss franc, in my career, I've traded this thing up in the 120, 115, 117. This thing can't even hold above parity over a series of rate hikes from the FOMC, all of these different things. There is no money going into the US dollar against the Swiss franc, despite the fundamentals that if you park your money in Swiss francs, you're paying to do that, negative 0.75. So when we look at this, we would assess that we are likely going to come into the lower end of this range. But remember, guys, we are still in a range. So the low end of that range is 96.50. We're going to see if we can push through that. Once again, our medium-term crossing our long-term predicted difference, a falling RSI, an inverse trade to Euro-US. Euro-US goes up, US Swiss franc goes down. That's how this game works with these two pairs. So right now it's warning us that we are likely going to test this level. But in this area, we've got our T-cross long, 98.07. This is basically the sell zone that we've looked at in the live room and with my own direct clients. We've all looked at this area and said, look, the stock, as long as that S&P 500 is pinned below 29.40, then US Swiss franc is going to be pinned also. It's not going to be able to move up to any extent. We're falling lower, and again, if we look at the dollar yen, we see the exact same bar off of the exact same level, but the dollar yen is far more pronounced off of these zones. That long T-cross long 106.49, combining that with our verified resistance zone at 106.97 paints a very clear picture that there is no buyers up here. There are only sellers, despite how low this is. So right now, when we look at our VantagePoint software, we should probably be looking for a move back down towards this low area of 104.80. The indicators in the software are mildly oversold, but when the dollar yen gets moving, guys, it's like a freight train. Don't try and get in the way of it. It's going to keep moving. Right now, on a technical intermarket correlation or the fundamentals, none of it support longs on this particular pair unless this trade war is completely gone, the Fed changes its tune, and I don't see any of that happening in the near future. So the likelihood is, if we can break down below this particular level, down around 105.29, and then breach that 104.70 area, that could open the door back towards the 100 level. Now, with the pound dollar, last week we talked extensively about this over the last few weeks, that we need to break two levels this previous week, which we managed to do on Thursday. Some of the Brexit highlight, some of the news about Brexit and a possible solution. I'm not convinced that that's going to happen yet, but we've taken out the key vantage point level of 121.78. We've also cleared this critical resistance on this verified zone, which is coming in at 122.09. So 122.09, 121.70 area for next week. We're going to see if this area can hold. If it can hold, that will allow us to target back up towards the high point. That's going to come in at or about the 125.21 area. Looks good right now, guys, but one word about Brexit or further risk-off environment could really hurt the British pound. This is more about US dollar weakness than it is about the British pound strength, just to clarify. So we're going to watch this zone down here for potential longs, but we also want to watch in our software that pink line crossing over that blue line. As I've shown you with Euro US, just about every pundit on this planet was saying that the Euro US this previous week was going to break through 110, except probably for me. And I had stated, no, I'm not seeing that. And the medium term crossing the long term predicted difference gave us that signal, or if nothing else, it warned us not to go short below 111, right? So the same thing with the British pound. Watch for a turn on here. If it starts to turn down and we're slipping back below 122.09, then you want to fire at will on those shorts. Now, with the US, there are three main commodity currencies. I'm going to start calling them equity currencies, guys, because the Aussie, New Zealand, and CAD are more responding to the equities than they are to commodities. That's the very odd thing here. Now, part of that is summer trade, but when we look at this right now, once again here, guys, that key vantage point level, 132.64. We've got a verified zone in there, and we've got additional verified support down to this low area of 131.89. At this particular time, I am not anticipating a breach of this level. I would be more concerned with a break above 130. If we break above 133.38, then the pressure will be off the downside and this pair is going to reverse. I would assess that based around what's going on globally, that the Bank of Canada is going to come under pressure to cut rates with the FOMC. That will not help the Canadian dollar. That will hurt it. So for next week, we want to watch these zones down here, guys. And there's another big one sitting right here at 132.50. If we can't break below the T-cross long, then we want to start looking at getting long off this particular area. Now, with Aussie US and New Zealand US, there's just no buyers here, guys. Rate cuts, risk-off scenario really hurting it. So we've got some support here, but what it's going to take for Aussie and New Zealand to turn around is for the trade war to be resolved, for the Bank of Australia and New Zealand to back off these rate cuts. I don't really see that happening either. Maybe New Zealand will take a step back here, but once again, we've got to watch these major support levels. If we lose this level here at 67.36, then that opens the door probably very quickly for 66.77. Now, once again, just no buyers up here. Any kind of recovery is met with selling off of this verified zone coming in at 68.21. Now, again, using these verified zones really simplifies our trading because it's, first of all, it's not lagging because it's not a moving target, right? It's a sitting target. The market comes up to that area, usually creates another zone or it breaks through. So we want to continue to monitor these zones and know these levels, not to get aggressively short or long at any of those levels. The same thing with New Zealand, guys, for next week. It's not, again, it's pausing 2 days in a row here. We've got this big move down. A lot of this has come from that 50 basis cut from the Bank of New Zealand, but this low area at 63.77, we're going to see if this area, if we can recover above this. But again, there's not a lot of reasons right now to be buying the Aussie, the New Zealand, or the CAD. That's all I'll say, unless the global outlook starts to change somewhat. So with that said, guys, this is the VantagePoint AI Market Outlook for the week of August the 26th, 2019.